Hello everybody, Brandon here from the chat, also known as TTF in the chat. And as you guys have noticed, you've seen me mentioning quite a bit divergences. ES, bullish divergence, NQ, bearish divergence, so on and so forth. And I've been mentioning that, and Jeff asked me to do a video, so I'm going to put something together real quick, and hopefully it's beneficial and helpful for you guys. So just in terms of speaking about divergences, not going to get into too much of the levels, but just want to give you all an example. So this morning, based on what I was seeing ES doing yesterday and overnight, the way that it kept ripping through 3,900 going down and then reclaiming it right away, led me to believe that we were in for a bullish day. And so when the market opened, the first thing I did is I noted the 930 lows. And I typically do this every single day because whether you're bullish or bearish, the 930 lows or highs, they like to sweep them. Because so for instance today, if you got in here and you were long at 930 or 935, whatever it was, and the market's pushing up, more than likely, these folks are going to put their stop below that low of day, thinking that the market's ripping, this is where I'm going to put my stop loss, if they're not trying to take profits up here. They should have been trying to take profits up here in this range because this is where it broke the London session highs that were put in at like 3 or 3:30 in the morning. So this should have been a profit target, but if it wasn't, they're still holding. And their stop loss is at the low of day, and the market makers and the algorithms are coded to draw towards liquidity. So once it took out this buy side liquidity up here, and I don't have the level notated, but just know that it took it out here, the next thing that it's going to do is revert to sell side liquidity. So what it does is it comes down and breaks the low of the morning at 930. Well, when that happened, I noted in the futures chat, ES has a bullish divergence. And what I mean by that is, so as NQ came down and broke the 930 lows, and ES did not, this created a bullish divergence on ES. As you can see here, it has relative strength. So it's important to note, ES and NQ are very correlated. I have seen maybe one time, and it was in the first 10 minutes of the market, where one was moving up and the other was moving down. They are correlated. They work in tandem. They'll give you, if you're not watching both of them at the same time, I would highly recommend that you do, because if you're only watching one, the other market may be giving you clues as to why we are going to have a pullback or why this might provide support, so on and so forth. So I'm constantly, this is my screen right here. I have ES 5-minute upper left, NQ 5-minute lower left, ES 1-minute upper right, NQ 1-minute lower right. And I'm constantly watching both of them at the same time, looking for little clues, that's another puzzle piece for what may be happening. So as you can see, when NQ broke the 930 lows, the market open lows, ES did not. And at this moment, that's when I stated ES bullish divergence. So you can see over here on the 1-minute chart, we get the bullish divergence. And so after NQ takes this sell side liquidity, the next thing it's going to do is revert to buy side liquidity, which would be at high of day. So with ES being the stronger of the two, relatively speaking, today I'm looking, or at least in the morning session, I was looking for longs on ES and shorts on NQ. So when NQ breaks and gives us this bullish divergence on ES, it puts in a basing candle on the 1-minute, which is this purple candle right here. And the break of that candle would have got you an entry at 39.14. And your target would have been at new high of day, which is 39.30 in a quarter. So you would be looking at a 16-point move on ES, which trading one contract would be an $800 move. So a nice move, Could have made $800 by 10:30 in the morning, just being patient and waiting for that one setup. Now there's some other scalps in here, but in terms of divergence, this was the main divergence today that backed up my bullish bias theory. And when I saw this, I was like, okay, the QQQ lottos I bought yesterday are probably a decent hold for the rest of the day. So then later on, what do we have? We get this new high a day. ES is trending up here. NQ's following with it. And at 11:55, NQ, damn it, NQ makes a new high of day. At the same time, ES fails to break high of day. So right there, I'm thinking, okay, this is decent for a short scalp. And that's when I posted in the general chat, I'm going to get in some SPY lotto puts. Now, you'll notice before, earlier in the morning, I was longing ES because it was showing relative strength. And then all of a sudden, in the afternoon, I'm shorting ES based on relative weakness. So I'll go back and forth just based on these two markets. I'll trade ES and NQ based on relative strength and weakness. And if there's really a trade that they're both lining up for, whether in one direction, I'll trade them both at the same time. So you can see here over on the 1 minute chart, here's your bullish divergence as NQ breaks the high, ES does not. It puts in a nice basing candle right up here, and this is where I got in at 39.46. This liquidity right here would have been your first target at 39.3675. And then I was looking for an entry into this 1 minute fair value gap, which is exactly where it came. So you can see here, I'll go to my regular drawings. And fair value gaps are things that I can get into a little bit later. And it's fair to point out, none of this is my research or my teachings. This is all stuff that ICT teaches. If you're not familiar with ICT, Chinner posted an awesome link, I believe, that Nate has pinned in the futures chat to give you a brief introduction into ICT. His YouTube videos tend to be very long-winded and take a lot of time to work through. What Chinner posted and that Nate pinned is a fantastic resource to kind of get an introduction into it. So you can see here, this level right here on ES, 39.40 to 39.45, is an old hourly fair value gap that that I was watching from, I'd have to go back and look, but I think it might have been from 2 days ago. You can see that it comes in here, so I was already, another piece of the puzzle. I'm already watching this area for potential reversal signals. You can see that NQ was also in that, that hourly fair value gap as well. So then it puts in that basing candle, and then that's where you get your sell-off down into this fair value gap before you get the pop to the new high of day. So that's pretty much what I'm looking for in divergences. As I mentioned, these markets are so correlated that they will tip their cap whether what's going to happen at one point or another with these divergences. So you factor in where it's at on the chart, what your bias is, so on and so forth, and it's a really strong piece of the puzzle to get you a decent scalp or to signify a reversal. Now you can tell in this particular instance, because I was bullish bias on the day, this bearish divergence that happened, right here at about noon, I was not looking for this to go to new low a day. I think I made a comment in the chat. Let's see if we can get a run back down here to 39.22 to take out this pivot, because this 39.22 level has been extremely important the last few days. But it was done messing around with it. It came down here, it swept the liquidity underneath this low, it entered the fair value gap, filled all these unfilled orders that were sitting in here, and then we got a nice move back up. So, and just to go over one more thing, if you do not follow the futures, if you trade SPY and QQQ, and it's easier to keep this on your screen instead of the futures, same thing. You get your bullish divergence on ES in the morning. You get your bearish divergence, I'm sorry, on SPY in the morning. You get your bearish divergence on SPY in the afternoon. It does the same exact thing. It's charting pretty much identical to the futures. So the important thing to understand is to just monitor them both at the same time, in my opinion. Once I've started doing that, it's changed my whole outlook and my understanding of the market. Because, like I said, you will see these divergences and these discrepancies that will indicate and will give you a clue as to where the market's going to head. So one of them tends to always have relative weakness or strength. They do like to keep them aligned. So, for instance, if ES went outside day to day, if ES did not go out, or if ES went outside day to day and NQ did not, tomorrow I would be looking for a scalp for NQ to take out Monday's or Tuesday's highs, based on the fact that they like to keep they like to play catch up, or they like to keep everything aligned. But in terms of intraday, there's usually a nice clue in terms of divergence as to where they're going to take the market. So hopefully this was helpful. If it was helpful, I can do a couple more videos. If it was not helpful, just please let me know. If I need to be more detailed, slow down, provide more context, whatever, just please let me know. But hopefully this is a good video that just shares, in terms of divergences, what I'm looking for. So other than that, I will talk to y'all in the chat.